On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. We're almost there, team. The US presidential election is upon us, just a matter of days away. It's scheduled for Tuesday, November 5th, which means all the action will be a day later here in New Zealand, Wednesday the 6th. Polls will close in some of those East Coast states about midday on Wednesday, our time, while in California, which is obviously on the West Coast, it'll be that evening, about 7 p.m. New Zealand time. And that means that coverage of the vote count will take place on Wednesday night here in New Zealand. And we might know the outcome by the early hours of Thursday morning, unless it's a close one, that is. And it's not unusual for Americans to have to wait days or even weeks before they know the outcome, if it really is tight. One notable example was the US election of 2000, a little over 2 decades ago. George W. Bush and Al Gore were both vying for the presidency, and it came down to one state, Florida. Very close on election night. The TV networks actually called it for Gore, then they changed that call to Bush, then Gore conceded, before then rescinding that concession. Voters then had to sit through 5 weeks of recounts and court rulings, and it took a Supreme Court decision, which still remains controversial today, for Bush to officially be declared the winner, but that wasn't until mid-December. This time around, many of the polls suggest that it's too close to call. Many of them are within that margin of error. I think that bodes well for former President Donald Trump, who performed much better than the polls suggested in both 2016 and 2020. He obviously won in 2016 against Hillary Clinton, wasn't expected to, at least according to the polls, and then 4 years ago, Joe Biden was expected to romp home after Trump's poor handling of COVID-19 and a range of other issues. However, Trump performed much better than expected, and it was a lot closer than many people thought back in 2020. So unless the pollsters have improved the accuracy of those polls over the last 4 years, you'd probably say Trump has the edge. And that might be why the betting odds are tilted in his favour, and that many people, particularly on Wall Street, view Trump as the favourite at this point. As is often the case in the US, the result will probably be decided by a handful of swing states that could go either way. Pennsylvania looms large as one of the big prizes. It carries 19 electoral college votes, which is higher than many of the other battleground states. Pennsylvania proved to be a real tipping point in 2020 when Joe Biden flipped it back to the Democrats. Another that's always worth watching closely is Ohio. In the 25 elections we've seen in the last 100 years, Ohio has picked the winner on all but 3 occasions. That's a hit rate of close to 90%. Its status as a bellwether did come into question in 2020 when it stumbled by voting for Trump, who then lost. But I still think it's worth watching Ohio. Before that, it had picked the winner for 14 consecutive elections from 1964 right up to 2016, including those 2. The other states that are worth watching are the likes of Arizona, Nevada, Wisconsin, Michigan, North Carolina, Georgia, those usual suspects that do tend to be very close. If Trump does win another term, there are several things investors need to keep an eye on and be aware of. For a start, more tariffs are likely, and China is set to be in the crosshairs once again. Tariffs are inflationary, so that could mean that US longer-term interest rates go up and the yield curve could steepen. This America First approach could be a positive for the US manufacturing sector because it will become more competitive, and this would support the greenback, the US dollar. That's a key reason why the New Zealand dollar has slumped below US 60 cents in recent weeks. That's a big fall, about 5 or 6% just over the last month. And that's something the Reserve Bank will be keeping a close eye on, because a big part of the decline that we've seen in New Zealand inflation has been because imported inflation has been coming down. That tradables inflation has actually been negative on a 12-month basis. And part of that has been because the Kiwi dollar has pushed a little bit higher in recent times. But if a weaker currency puts that trend at risk and it sees that imported inflation, that tradables inflation maybe rising again, that could lead to headline inflation being a little bit higher than people had otherwise expected. And that would mean the Reserve Bank might consider less aggressive OCR cuts, because it might tell them that inflation is not quite as under control as they were hoping for. So it's something we do need to keep a close eye on. Trump would also look to extend his own tax cuts from 2017. Those are set to expire at the end of next year. Now, the degree with which he can do that might depend on how successful his Republican colleagues are in the Senate and in the House. So the tax cuts could be a bit dicey in terms of how much he can do there. That's quite different to tariffs. With the tariffs, the president has quite a lot of power and influence on his own. But for something like tax cuts, he would need the support of Congress. So we do need to keep an eye on what happens in the Senate, what happens in the House of Representatives too. We should also expect less regulation under Trump, as was the case during his first term. You put all this together, whether it's lower regulation, whether it's lower taxes, these things are pro-growth, business-friendly policies. So a Trump win could actually spur further gains for the US share market. And we might see some of those more cyclical sectors of the market perform well. Energy, industrials, financials, banks. Some of those parts of the market could be the potential beneficiaries. You might see smaller companies also see outsized benefits, because it might be some of those main street businesses that benefit most from things like lower regulation or tax changes. In terms of the losers, well, clean energy seems to be one that will find itself under more pressure. Healthcare as well could be set for less favourable conditions, and the high-growth tech sector might also face more challenges than it has under the previous regime. Investors have already started positioning for all of this, although markets like certainty, so there will be more to come, one would think, if Trump pulls it off. In contrast, a victory for Vice President Kamala Harris could see quite a sharp reversal of some of that recent price action. It'll be a tight race, but Trump might just have the edge heading into next week.
For more insights, visit craigsip.com.